Under a new deal between the U.S. and other nations to halt Iran's nuclear program, Tehran isn't wasting any time to restore its weakened oil industry. Although tough international sanctions on Iran's vast oil and gas wealth aren't going to disappear overnight, the nuclear talks appear to open the door to an eventual return of the nation's oil influence. And that could have big implications for OPEC and world energy markets. Joining us to discuss this are two leading Washington consultants, Sara Vakhshouri, a former advisor to the National Iranian Oil Company International, and Kevin Book, the managing director of Clearview Energy Partners. Welcome back to the program.
Thanks for having us.
The OPEC met the other day, and it agreed to leave its quota, its production quota, at some 30 million barrels a day. It did that to try to keep prices at their current levels. How did these latest developments with Iran factor into the OPEC meeting, Sarah?
Well, Iran is hoping that it can increase its production, particularly because of the latest nuclear deal they gained. The Iranian minister announced that they're going to soon reach to 4 million barrels a day. They're going to increase their production in 2014 to that level. Also, we have Iraq and Libya that they're announcing. I mean, they're waiting to increase their production in the recent years. So that was really a wise kind of decision for OPEC to keep the level to the 30 million barrels a day, to wait and see, okay, how the supply from the OPEC member is going to change, and then decide accordingly.
Well, Kevin, it seemed to me that this meeting wasn't so much to make any big decisions, as Sarah says, but rather to wait 6 months from now, when the next OPEC meeting will be held in June. At that point, we should have, or will we have, a better idea of where these talks with Iran are going.
I think we'll have a pretty good idea of where things stand by June. June takes us to the end of the other 6-month window, which is the first step agreement reached in Geneva. And things don't get done until the last minute in any negotiation. But the tenor of that negotiation and the way that it's being received here in Washington and also in Tehran will be evident well before then.
You mentioned the 4 million barrels a day of production that Iran would like to get back to. I found very interesting, as did reporters around the world, it seemed, that Iran's oil minister, Bijan Zaganeh, said that Iran, under any circumstances, will reach 4 million barrels a day, even if the price fell to $20 per barrel. I mean, doesn't that seem overambitious?
For Iran to produce 4 million, no, because they were producing 4.2 million before, in years before. And Iran already got all the projects that they were under buyback contracts. The projects have been finished, so they were producing this level. And they don't need really a significant technical or investment level to reach to that 4 million barrels a day. However, I think that for immediate time, they can raise their production about like 500 to 800,000 barrels per day, because during the winter they have to use some of their gas that they're using to inject to the oil well to increase the production. But with a bit of delay, they can easily reach to that level. And Iran sees that as its right to get back to the production that they were producing before. That's why they put this responsibility on other OPEC members that they cover for Iranian oil during the years of sanctions.
So maybe the $20 was, maybe that was just hyperbole,
yes.
Kevin.
Yes, that's a very strong statement, and what it was clearly an assertion of Iran's view that they wanted back into the market because others had been eating their market share all this time. And I agree utterly with what Sarah said. There's some now oil, and whether the number is 400 or 800,000 barrels per day, NIOC will have to tell us. But then there's some later oil, and Iran is still sitting on top of 137 billion barrels of conventional reserves. And so when you start talking about the later, the future, and how it looks, think about Iraq. Now, Iraq isn't a particularly perfect proxy because Iraq had been underinvested without the technology. But the resource base was enormous. Bring back Western super majors, find attractive terms that keep them there, and Iran could easily get past 4, sure.
But where does the oil go? Can they find, because that has to do with the sanctions that are still in place and will remain in place for some time. I mean, they got to sell this oil someplace, right?
That's
and
true.
It's not easy.
That's a very good point, Bill, because one of Iran's challenges is to gain back its market. And, well, they already started visiting the refineries that they used to use Iranian oil. Iranian oil minister have appointed high-skilled professional diplomats in his team to work on the negotiations. Well, on the consumer point of view, and also refineries, they always want to have a diversifying the resources for their security of supply. And Iran, during the history at least, in a very current history, was a very reliable supplier for them. So would not be very hard for Iran to gain its market back. We have also this missing oil that can absorb some of the excess supply.
There's a lot of factors, missing oil being among them, but then again, the sanctions are still there, Kevin, and they're, even if a deal, some sort of deal struck in 6 months, we don't know exactly what that means for these sanctions, some of which are a matter of law in the United States.
Right. It's not a simple matter to just say stop. As it turns out, it's actually kind of difficult. It requires an act of Congress, and the Congress that we have right now effectively treats Iran sanctions as a 100-vote issue in the Senate. There's very few people who stand in front of that right now politically. So the burden of proof is going to be very high. On the other hand, there is executive authority built into the existing sanctions regime. It can be invoked with the approval of Congress. And if there is a demonstrated effort that satisfies the concerns of the Iran hawks, then it's not unthinkable that the sanctions, particularly the bottom-up banking sanctions and the oil sanctions, could be lifted, and potentially in 2014.
Well, Sara, I mean, how do you think Tehran looks at these sanctions and the prospects for them being lifted?
The 6-month time, we have some of the sanctions are going to be lifted or being kind of waived, like banking or transportation, insurance, and this is going to help Iranian oil export back in the market. But on the other hand, Iranians are laying the ground to absorb and attract more investment in their oil and gas industry. They are revising their investment regulations, which was a buyback system before, but they're going to increase the profit somehow for the investors. They haven't announced it yet clearly what is going to be the new type of contracts or revised, but they're going to do that. And they have already organized a conference sometimes in early April to talk with different companies on the post-sanction topic and introduce the opportunity for investment with the focus on the share field, oil and gas fields with the neighboring countries.
So they are laying the groundwork for what they hope will be an even greater easing of these sanctions some 6 months, 1 year from now. So much to discuss here. We'll have more to discuss, I'm sure, in the months or weeks ahead on this issue. One of the biggest in the world, obviously, for many reasons, and also for world oil markets. Sara Vakhshouri is with SVB Energy International. Kevin Book, Clearview Energy Partners. Thank you very much.
Thanks for having me.
The process of enriching uranium for nuclear purposes, weapons or otherwise, is getting a lot of attention.